All right, let's dive into a mystery that costs traders billions every single year. It's a question that stumps so many people. And the answer? It's not what you think. 91%. That's the actual number of traders who lost money in a recent fiscal year. The official data is staggering. We're talking huge losses. And the average loss per person is just brutal. So, is it just bad luck? Kind of like a casino? Or is there something deeper, more predictable going on? Turns out, the real culprit isn't the market at all. It's much closer to home. See, our brains basically run on software, and that software has built-in glitches called cognitive biases. So let's meet these invisible saboteurs, the little glitches that are hijacking your investment decisions. First up, loss aversion. This is the one that makes losing feel way worse than winning feels good. Basically, the pain of losing money feels about twice as strong as the pleasure of gaining the same amount. Next up, confirmation bias. This sneaky saboteur turns your mind into a total echo chamber. It means we only look for info that proves we're right, and we totally ignore anything that says we're wrong. And our final saboteur, the bandwagon effect. It's the powerful, often dangerous pull of the crowd. Yeah, this is classic herd behavior. If everyone's panicking and selling, your brain screams, "Me too." Okay, so how do these little mental glitches actually cause a full-blown financial disaster? Let's connect the dots. It's a chain reaction. A market dip triggers fear, the crowd panics, and boom, you sell at the bottom. And this isn't just theory. We saw this exact pattern play out in 2008 and again in 2020. And in both cases, the people who resisted the panic and just stayed invested were rewarded immensely. So how do you stay out of that 91%? Well, it's not about finding some hot stock tip. No, the most essential first step isn't some complex strategy. It's something way more powerful. It all comes down to one thing: awareness. Simply knowing that these biases exist is a game changer. This awareness is like a superpower. It lets you pause and question your gut reaction in the moment. So now that you know your brain is literally wired to make mistakes, how will you approach your next trade? All right, let's just get right into it. Ever wonder why so many smart people, maybe even you, end up losing money in the stock market? It's the super common, super frustrating story, right? Well, today we're going to pull back the curtain on exactly why that happens. And here's a little hint. The answer: it's probably not what you're thinking. Okay, let's kick things off with a number that might just blow your mind. A recent SEBI report found that a whopping 91% of people trading in futures and options lost money. Think about that for a second. That's not just a few people having a bad year. That's nearly everyone. We're talking 9 out of every 10 traders are in the red. It's huge. And we're not talking about small change here. The total losses have just exploded. They've gone from about 40,000 crore rupees just a couple of years ago to over 1 lakh crore now. That's more than double the losses in a really short time. And what's crazy is that more people than ever are getting into trading. But here's the kicker: more people hasn't meant more winners, it's just meant way, way bigger losses. So you gotta ask, right? What is going on here? Is the market just rigged? Is the whole system set up for the little guy to feel? Or is there something else at play? Some kind of hidden trap that we keep falling into over and over again? Well, it turns out the biggest enemy, the real reason for all these losses, it isn't the market, it's not the economy, and it's not some big conspiracy. The real culprit is actually hiding inside your own head. It's our brain. Yeah, this culprit has a name: cognitive bias. So what is that? Basically, they're mental shortcuts. You know, our brains are wired to make super fast decisions to help us survive, like, is that a tiger in the bushes? Run. And that's great for survival. But those same shortcuts, they can be an absolute disaster when you're trying to navigate the stock market. Here's a great way to picture it. Think of these biases as your brain's default settings, right out of the box. They're always running in the background, kind of pushing your decisions one way or another, and you don't even notice it's happening. They're like these little bugs, these glitches in our mental software that make us repeat the same costly mistakes. Okay, so let's get into the nitty-gritty. There are literally dozens of these things, but we're going to focus on the big 3, the ones that are the most powerful, the most destructive, the ones every single one of us has to battle. First up, we have a real heavyweight in the world of mental biases. It's called loss aversion. And this just nails the concept. Study after study has shown that the pain you feel from losing, say, $100 is about twice as intense as the joy you get from gaining that same $100. It's wild, right? We are literally hardwired to hate losing more than we love winning. Ever had this thought, ugh, I can't sell now, it's down too much. I'll just wait for it to get back to even. Sound familiar? That right there is loss aversion kicking in. It's why we hold on to losing investments way too long, turning a small, manageable loss into a huge disaster. And on the flip side, it's what causes panic selling when the market dips. That fear of losing even more becomes so powerful that people sell everything at the absolute worst moment. All right, on to number 2. This one is really sneaky. It's called confirmation bias. So, what is it? It's our brain's tendency to look for proof that we were right all along. As soon as you buy a stock, you start building this little echo chamber for yourself. You suddenly find all the articles that say what a genius you are for buying it. You start following the gurus who agree with you. And any bad news, any report warning about risk, fief, that's just noise, right? Or fake news. See, the key thing to get here is that it's not about wanting to be right in the future. It's about needing to have been right in the past. It's all about protecting our ego. Our brain just hates admitting it messed up, so it'll literally filter reality to keep us feeling smart. Okay, and that leads us right into our third and final mental trap for today, the bandwagon effect. But you probably know it by another name, FOMO. Yep, good old fear of missing out. It is such a powerful, primal instinct. This is classic herd behavior. You see some stock go into the moon, you hear stories on social media about people making a killing, and your brain just starts screaming, "Get in now, you're gonna miss it." Your decision has nothing to do with the company's fundamentals or its actual value. It's all about the fear of being the only one left on the sidelines. And let me tell you, this is the rocket fuel behind pretty much every single market bubble ever. Okay, so this sounds pretty bad, right? Like our brains are just programmed to fail with money. So are we doomed? Absolutely not. Just knowing about these biases is a huge first step. But the real game changer is creating a system that protects you from yourself. So how do we do that? How do we shift from being a gambler to a real investor? This really breaks it down perfectly. You've got 2 completely different paths you can take. On one side, you have the high-risk trading game. That's the get-rich-quick casino mindset. It's all driven by emotion, by FOMO, and as we saw, the odds are, well, they're terrible. But on the other side, you've got long-term investing. This is the build wealth slow farming mindset. You plant seeds, you're patient, you're disciplined, and you know what? Over the long haul, the probability of success there is historically very, very high. The trick is to consciously decide you're going to be the farmer, not the gambler. Make a plan and stick to it, even when the crowd is going crazy. And really, this is the most important thing to remember from all of this. The best tool you have, your biggest advantage, it's not some hot stock tip from a friend. It's self-awareness. It's building a system that acts like a firewall between your emotions and your money. What does that mean in practice? It means making your rules before you get into a trade. Decided in advance, I will sell if it drops to this price, or I will take profits if it hits this price. That system is what stops fear and greed from taking over. And it's what keeps you from becoming another one of those statistics. So, I'm going to leave you with a question to think about. The next time you're hovering over that buy or sell button, just stop for 1 second and ask yourself, am I actually making this decision, or are my ancient brain biases making it for me? Seriously, the answer to that one question could be the difference between becoming a successful investor and just becoming part of that 91%.